Good morning, good afternoon, good evening, wherever you're watching from. Like I said earlier, we're going to be discussing mainly about chat pattern. Chat pattern. We have lots of chat patterns. We have a lot of them. We have the continuation chat pattern. Then we have the reversal chat pattern, right? We have the reversal chat pattern. But most importantly, the most occurrence on in the chart is the reversal chart pattern, which are the double top, double bottom, head and shoulder, and inverse head and shoulder. These four right here. So we are going to be talking basically on the reversal chart patterns because they tend to change the market direction. If the market is bullish or in an uptrend, when you see a reversal chart pattern, probably a double top, a double bottom, head and shoulder, inverse head and shoulder, the market which is a bullish market, we tend to change direction to a bearish market. So we are not only going to be talking about this, but rather we are going to be showing live. I'm going to be showing you live examples. But let's move on from here. So now we have the first one, which is part of the reversal chart pattern. We have a double top. A double top is like an M. They call it, some people call it M. Double top in the sense that we have something like this, double top, and double bottom. We have double bottom like this as well. Double bottom, double bottom. Then we have head and shoulder, head and shoulder. We have something like this. This is third one. Then we have the last one, which is what? The inverse head and shoulder. This is the inverse head and shoulder. So it's the same thing as the head and shoulder, but this is just an inverse. Just an inverse of the head and shoulder. Let me draw this again. Good. Now the double top is called a double top because of these two tops here. We're having these two tops. This is why it's called the double top. While the double bottom is also called double bottom because it's also having what? These two bottom here. The head and shoulder is named head and shoulder because it's more similar to the woman body. Just like you're having the head, then the woman we as we know we have two shoulders, right? Then these are the two shoulders. That's why it is called head and shoulder. These are the two shoulders, right? These are the two shoulders. So whenever these chart patterns occur in the market, or whenever you see them in the market, you tend to know that okay, most likely this market is going to change direction from a bullish trend to a bearish trend, or rather from a bearish market to a what bullish market, uptrend to downtrend, downtrend to an uptrend. So this is how the chart pattern works. It works effectively well, most especially on the higher time frames. Is what works effectively well. Now, how do you now trade this chart pattern? How do you trade the chart pattern? You trade the chart pattern at the neckline, at the retest of the neckline. In the sense that when you have a chart pattern like this M, it's also called an M, like I said, double top or an M. This is the neckline. The neckline is the V in between. That's what is called the neckline. It's the V in between. It's called the neckline. So now when the market breaks it like this from an M, you wait for the market to pull back into that neckline, this V right here. You wait for the market to pull back, then you enter for your sell. The market will sell all the way down, right? Now, if you want to enter for a double bottom, for a buy now, you enter at the neckline as well. This is the neckline of the double bottom. You wait for the market to break it, then what? Come back into that zone. Come back into that zone, then you enter for your buy. Because this is like this retest to the neckline is confirming the buy. It's confirming the buy, or it's confirming the actual change of trend. Now, let's look at this now. Like I said, when you see this chart pattern, they are like a reversal chart pattern in the market, in the sense that the market that is bullish will turn bearish. For a double top now, it changes a bullish market to a bearish market. Imagine the market is performing higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Then all of a sudden, you just see a chart pattern forms. Once you see this chart pattern forms, automatically you know that definitely you are changing what the market is changing from a what bullish market to a bearish market. Then you start looking for yourselves. These are what determine retail traders, or what the factors that make traders change their bias. Normally you'll be buying in a you'll be, I mean you'll be buying in a what a bullish market. sorry, you'll be buying in a bullish market. But as soon as you see a chart pattern forms, you wait for whatever the chart pattern wants to do, and you wait for the market to retest that neckline. Then you do what? Enter for yourself. And you see that's when you see that pattern. I mean, the market changes trend from lower, 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 high, lower, lower, high, lower, lower, high, lower, lower, high, lower, low. Same thing for this what? Double bottom here or W. Same thing for this double bottom. Now the market, which is what? Which is bearish, tend to change bullish. Now we have something like this: lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Then all of a sudden, you see market form what? Form a double bottom. This market is telling you that okay, I'm not selling again. I want to start buying. That is what this chart pattern are telling you. That's why they instead of this market now to form what? Lower high to form a low. Rather, it didn't form a low. It did what? It formed an equal low. Now we're having a lower high here. Instead of the market to form a lower low like this, but the market form what? Equal low and breaks this neckline, then retest on it, which is actually telling you that okay, I'm not selling again. I want to start buying. So these are what this chart pattern are telling us. Same thing as the head and shoulder and also the inverse head and shoulder. Whenever you see the head and shoulder as well, it's almost similar to the double top in the sense that it changes a what? A bullish market to a what? To a bearish market, to a bearish trend. From an uptrend to a downtrend, higher, high, higher, low, higher, high, higher, low, higher, higher, low. All of a sudden, you see an head and shoulder forms. Once you see an head and shoulder forms, you know automatically the market is trying to change from a what? Bullish market to a what? Bearish market. The same thing that applies to this, to the double top and double bottom, the same thing that applies to the what? To the head and shoulder and the inverse, in the sense that you take the sell or the buy at the retest of the neckline. This will be the neckline. These two, these two will be the neckline. Then you wait for the market to what? Pull down, then do what? Come back into that zone before you what? Enter for yourself. Before you enter for yourself. Same thing as the inverse head and shoulder. Inverse head and shoulder. Automatically, you know that this market will change what? Bullish. From a bearish market, then what? It's done what? Bullish. This is the neckline. You wait for the market to pull a little bit upward. Then you wait for the market to come back into the neckline. You are not concerned if the market is not coming back. You take your sell or your buy at the retest of the neckline. If the market doesn't retest the neckline, you are not going to enter the trade because you have to follow your trading plan. It's part of your trading plan. It's part of the way you execute a chart pattern. You know, patience is more or less trading. You have to have patience whenever you are trading. You have to wait for the market to come back there. I'm telling you, the market will surely come back there. If actually the market want to confirm the buy, unless the market is just going to buy or sell for a little while and change direction again. But for a chart pattern to be a chart pattern, it has to be what? It has to retest the neckline before what? Before putting up. I'm going to be showing you live examples for you to know what I'm saying. A chart pattern might actually form and it will sell, probably a double top formed. It will sell. You think the market is not going to buy again? Automatically some people, most people entering for a sell. But for you that you have the knowledge, you have that knowledge that this market is going to actually retest before the sell is confirmed. Some people be loading in their sells before you know the market will start reversing. To taking their stop losses. They will be like, what's going on? But you are seeing a chart pattern forming. You've seen a chart pattern already formed. You know that actually you have to wait. Even if you have to wait for a day, 2 days, 3 days, especially when you are seeing on the high time frame, it means you have to wait for a long time before you can actually what? Execute your sell or your buy at the latest of the neckline of the chart pattern. Right? I'm going to show you live example. You are going to see how it works perfectly well because it forms on every chart, almost every chart. Now, let's dive in and see the examples. So note what I said. We have what? Let me just do a quick recap. We have four reversal chart pattern. We have a lot of them, but the most one I see that often occur on the chart are just four, which are the double top, double bottom, head and shoulder, and the inverse head and shoulder. I don't want to like kind of load you with a lot of chart pattern and find it difficult to kind of spot out in the market. These are the ones that you can easily spot out. When we kind of see that you are able to kind of get this four chart pattern, then we can move up to the rest. But these are the four that are very that occur most in the chart. Now we have the what? Double top. This is example of a double top right here. This is example of a double top right here, right? We have the what? Double bottom as well. This is the double bottom right here. We have the what? Head and shoulder, and we have the inverse head and shoulder. right? These four chart pattern, they are reversal chart pattern. They signifies what? Change in trend. It means if the market is bullish, when you see it in the of the chart pattern, double top or head and shoulder, the market will what? Go bearish. When the market is bearish, when you see a double bottom or inverse head and shoulder, the market will do what? The market will go bullish. So this inverse head and shoulder right here, inverse head and shoulder right here, this right here, this inverse head and shoulder right here, it signifies what? It signifies from a bearish market to a what? Bullish market, as well as what? As well as the double bottom, as well as the double bottom. They change the market direction from a what? Bearish market to a bullish market. While the other two, which is the double top and the head and shoulder, they what? They change the market direction from a bullish market, which is an uptrend, to a bearish market, which is a downtrend. So note those two terms. When you say a market is bullish, it means the market is an uptrend. When you say the market is bearish, it means the market is what? Is in a downtrend. So those are the four charts that I've been talking about. So now let's put them out on the chart so we can actually know how they work. So let me delete all this so not be too. For now, looking at this, just mere taking into looking at this now. Look at this 24 hours. What can I see here? I'm already seeing a lot of chat pattern. Look at this double top here. Look at this double top here, right here. We're having a double top here. Look at it. A double top. And the market breaks it. Now, when this market is breaking it, you're not going to do anything or enter for a sell. You are seeing market selling, selling, selling. Let me enter for a sell. No, you don't enter for the sell because you have that knowledge with you that okay, you take a sell of a double top at the retest of the neckline. So now, where would it be neckline? This will be neckline, right? You just draw out your zone, just draw it straight away, and let the market come back there in the future. Let the market come back and react at that point in the future. You can see this market so the market eventually what came back to retest the neckline and see what happened. Look at the sell. And we see the sell that happen. So because you have to wait, you have to wait. Now let's just measure how long this is. So this market broke this neckline at the 16th, 17th of April, right? 17, 18, 19, 19, 20, 3 days before the testing. Now, 20, 21, 22, 23, 24, 25, 26, 29, almost a week plus before the market comes back to retest it. Now, imagine, look at the weight. It came back to retest after almost a week before the testing the neckline. You have other peers to trade, other indices to trade. Just wait. Put this at your watch list. Whenever it retests the neckline, enter for yourself. It's as simple as that. Though we have other conferences that we attach together before the sale happen, because for this as well, you have to go to your 15-minute time frame, draw out your confirmation trend line, then you enter for the sale. I don't know if the review are going to permit me to kind of go back in time to see the historical data so we can actually see how to take that sale. Let's try and see. Let's try and see. Oh, it's not possible. Let me go to 1 hour. Just for you to see how it actually, if they are not permitting us here, we can actually use another. Okay, just look at it. So using our trend line strategy, what we just do, just mark out your confirmation trend line, right? The trend line. I'm very sure Saimi will discuss more about this. I just want us to see how this trade works. You can you see this? This is what we actually see a break and retest at this point. A break retest to enter for yourself because this is confirming that this chart pattern is a good chart pattern. So these are actually what we are going to be discussing more in our next class or whenever we want to discuss about chart pattern more. At the break and retest, you enter for yourself and the market will move. So this is an example of what? A double top. So we take this double top at the retest of what? At the retest of the chart pattern. You can see a double top and M there. Now let's go on and spot another. Let me go to V10. Let's see. Okay, V50. That is V50 here. Having V50 now. Okay. Let me see. I think let me go to 4 hours. We have 4 hours right here. Good. Can we see this? This is a crystal clear chart pattern. Crystal clear chart pattern. Can we see the double top here? Can we see the double top? Get it? Double top. double top. The market break the neckline. You don't do anything. You won't do anything. Just wait. Just throw out your neckline, extend it to the future and wait for the market to come back into that zone. Wait for the market to come back down. You can see the market breaks it 26, 27, almost like 3 days before retesting. After the market retested, enter for a sell. You can see the overall sell down that happened. Look at the sell that happened. Because of this chart pattern, which is very effective, though the market ranged a little bit at that neckline, but you are very sure that okay, even let it range, you can go and sleep. Because this is a valid chart pattern, a good break and retest to the neckline, then the market sold all the way down. So those are the two examples. I've shown two examples of double top now. Now let's move on and see if we can spot a double bottom. Double bottom, let me see. V10. I'm having V10 here. It's at 300. 300. Okay. Now, can we see V100 right here? We see V100 right here. Look at the double bottom. Now, this is an example of double bottom. Look how we have it. We have this right here. We have the first bottom, the second bottom. Look at what the market did. Market break it. Then wait, don't do anything. Like I said, you just do what? Just draw out your neckline. Just extend it to the future. Extend it to the future and wait for the market to come back into that zone. And look at the market. The market eventually what? Came back into that zone. They enter for your buy. Can you see this? Can you see this? The market bought all the way up, all the way up. So this is another example of what? A double bottom. I'm already seeing another double top here. Look at another double top here. Can we see another double top here? Double top, double top, double top. The market breaks it. Wait, don't do anything. Once you see a double top, just draw out your neckline, extend it to the future, and wait for the market to come back into that zone. The market came back there and did what? Sell all the way down. Can you see? They are just reversal chart pattern. These are chart pattern that enables you to cut reversal chart pattern. Whenever you see them, especially on other time frames, they are high probability setup. They are what? High probability setups. Because once you see them, just take your trade. Take your trade. Take your trade. So now let me go to. We have spotted head and I mean we have done double top and double bottom. Now let's go for head and shoulder and inverse head and shoulder. Right. So we have head and shoulder right here. Can we see this head and shoulder? This is still for me. Can you see? I'm already watching this chart, which is V10. I'm watching this chart closely because of what? I've seen this chart pattern form. Look at it. I've drawn my neckline. I've drawn my neckline. Can you see? Because I'm expecting what this market for. I'm not concerned. Even eventually, this market now have a high probability of what? Of selling down to this next trend line here. Next trend line here. Before this trend line pushes back to this neckline of the what double of the head and shoulder. I mean, yeah, head and shoulder. And once the market, whenever the market comes back, say, I'm selling. I don't care about this trend line anymore because it's telling me it's telling me that this market is changing trend totally. It's changing trend now. Look at it. If you can't spot it very well, let me spot it for you. So we have what the first the left shoulder, then we have the head, then we have the what the right shoulder, which has broken. But it doesn't come back to what to test that neckline. It doesn't come back to test that neckline. So what are we waiting for? We're waiting for the market to pull back. This market might pull back from this point right here now to come back here. I'm selling. It might also what from this point here now, from this trend line might push it back. What would I do? I'm still selling. I'm not doing anything than to what? For me to what? To sell this market down. I don't care. It might come back here, go back up again to this market. I'm selling. What I'm just waiting for on V10, I'm not doing anything. Even if it takes 10 days for this market to come back to this neckline, I'm taking my trade. I'm taking my trade because I'm seeing an head and shoulder, which is what it signifies a change in trend totally. It's that change in trend. And I'm also seeing on 24 hours, which is a high probability setup for me. So this is an head and shoulder. This is the market I'm waiting for. Let me show you the one that actually happened. I sent a video into the group, an analysis into the group, and I said the market is going to reduce that because of an head and shoulder I saw, which actually played out. Let me show you the setup right here. It is step 200. Can you see this? Can you see this? I actually sent this into the group. Can you see this step 200 now? Can you see this? This market form an head and shoulder here. Let me go to the 4 hours so you can see it very well. So, I see. Okay, good, good. Now we have this right here. I just wanted to go to lower time frame so you can see the chart pattern very well. Now, this is a similar example of what? Patience. You have to discipline yourself to be patient when it comes to trading. Now, look at this. You're having an head and shoulder here. Can you see this head and shoulder? Can you see this head and shoulder? Can you see this? The shoulder, the head, then another shoulder. Look at this market now sell all the way down. I'm not concerned. I'm not even doing anything because I know anytime this market might pull back here, you can see when this market is selling down, it is a trick. A lot of people will be tricked. They will be selling, selling. Ah, this market is elemental for sale, elemental for a sale. Imagine someone who enter for a sale at this point. Imagine you enter for a sale at this point around this zone, from this zone down to this zone. What did the market did? The market eventually what came back. You think the market is selling, selling because of this chart pattern, but you have to what wait for the latest to the neckline before you sell down. The market started pulling back, pulling back, pulling back, pulling back, pulling back. Eventually, the market is what started selling, and I believe me, you this market is going to sell all the way down. Now let's look at how many days it took this market to work to test this neckline. After the break of this head and shoulder, you can see this is 12th of September. Just look at this zone right here. You will see the date that is being displayed. Now we have 11 September, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 23, 24, 29 September, 1st October, 9th October, 11, 13, 14 October. This market took almost 3 weeks before it came back to the testing neckline. Almost 3 weeks. Now, is the waiting worth it or it doesn't worth it? It is worth it because you know what you are actually waiting for, and it saves you from a lot of stress in entering a lot of long trades. So this is actually how you trade the neckline of the what of the chart pattern. Can you see this? The market came to retest it. What you do, just draw out your confirmation, straight out your confirmation trend line, and wait for a what? A good break and retest to the zone. Can you see this? This is actually how I send the group or the video I sent to the group. And the market actually did the same thing I said it's going to do. Why? Because I'm seeing this chart pattern right here. I'm seeing this chart pattern right here, and it's happening in what in 24 hours and down the time frame. So which actually confirms to me that this actually is going to work to sell. You can see the overall sell that happened. Overall sell that happened. It's going to and it's going to continue selling. You can see this is just like a reversal, and this is the continuation that's going to actually happen. Please, you should do well once you watch this video. Just try and watch, scroll up into the group and search the video I sent last, the analysis strategy. You're going to see the same thing. And I actually kind of talked a lot about the chart pattern that is going to happen, which is head and shoulder, and you can see it played out. So in subsequent video I'm going to be making or in our next class, I'm going to be actually talking about the pros and cons of what of chart pattern. When it's going to happen? Is it going to happen every time? No. What are the times that we are going to watch out for chart pattern not playing out? Even when you see a chart pattern like this, you might see it very big like this, and you'll be like, okay, I'm going to go for a retest to sell down. It might not actually happen. Why? Let me just say this now. Let me just say a little bit about it. When you see a chart pattern, it's not every time a chart pattern is going to play out. There are sometimes you see a chart pattern that is not going to play out. Why? It's because it is against the market trend. When you see a market going bullish like this or bearish like this, and you are seeing a chart pattern telling you to what to buy, you will not buy because the actual trend of the market at that moment is what is bearish. Now look at this for example. Let me show you this for example. Let me show you V100. V100. This is just an extra to the video, but I just want to like dive into it a little bit before our subsequent class. Now this is 30 minutes. It's 30 minutes, right? Let me see. 30 minutes. I'm thinking. Sorry, it's taking long. I kind of spotted one here. Okay, let me just show you. Let me show you this. V100 one is 101 is 101 is. So we have this in 101 is. We have this. Let me go to far so you can see it very well. We have this in 101 is. So this might look it might look complicating, but I can actually tell you that this is the chart pattern. We have this market is what is a bullish market. The market is bullish already. You can see the market has changed trend. It's going up. It's forming higher highs, higher lows, higher higher lows. Now all of a sudden you just see a chart pattern like this. You see this double top here, double top. You see this? Look at this double top. You expect the market to retest, which the market actually did. The market tested. People will be loading in their sells because they saw a chart pattern. When they said that the market is going to what, change direction, but no, this market is an uptrend because the trend actually just started. It's actually just started. Now, what eventually happened? We are seeing another double bottom there. Instantly, a double bottom formed. So which one are you actually going to go for? So this, you are seeing two chart patterns facing each other. You are seeing double top, you are seeing double bottom, right? Because this market is an uptrend, you follow this chart pattern, you can see this market broke it, then came back to retest what? The neckline. You can see the neckline. It came back in here. Then what actually happened? Market bottled you up, which is actually going to continue buying. This is just like a retracement, so continue the buy. So don't let this convince you. In our subsequent classes, we are going to be talking more about this, how it works and how it doesn't work. But I can assure you, 80% or 90% of the time, it's actually what it works perfectly well, and it's a high probability setup. So that's that. That's the little I can share about that pattern for now. Then, like I said, in our subsequent classes, we are going to be talking more about the pros and cons of that pattern. So, thank you.